Hello, Gary Wagner here. Just after 2 o'clock in Honolulu, 7 o'clock in New York. It is Wednesday, December the 9th, 2020, and this is the Daily Report for Gold and Silver. A tremendous drawdown in both gold and silver today, which forced stops that we raised yesterday to get hit. We did get out, but we got out with small profits. We'll discuss each and every trade when we look at our technical studies, but first to the price board. Both gold and silver sustained strong drawdowns in the market today due to a combination of factors. One, the lack of any real progress towards passing a fiscal stimulus bill. There are still disagreements on both sides of the aisle, as well as the emergency use of a vaccine to be rolled out in the United States. Gold currently fixed at $1,842.90. That's down $32. Low today was $1,828.20. We did send out a trade alert to move stops. Stops were hit at $1,850. We'll go through the trades in detail when we look at our technical studies. Spot gold also sustained a drawdown, currently at $1,839.30. We had some dollar strength, but it was fractional, with the dollar gaining less than 0.1% at 91.03, and silver dropped dramatically, losing almost 3%. 2.77% is currently trading at $25.05. ETFs that we follow: the Spyder Gold Trust, $172.50 a share, down $3. And lastly, silver, SLV, down about 2.5% or 60 cents per share at $22.23. Let's take a look at our technical studies. There is no doubt gold sustained a major drawdown, actually trading to a low of $18.28 before recovering. Currently, we have gold fixed at $18.41.20. We did send out a trade alert yesterday recommending that we raise stops. In the case of gold futures, this of course bases the most active February contract. We recommended moving the stop to $18.50. So traders that got in at $18.30, meaning they bought the open in New York on the morning that the trade alert was sent out, made a profit of approximately $2,000 per COMEX contract. And traders who took the call immediately when the trade alert went out, gold was at $18.43, they made a total of $7 per ounce, or $700 per COMEX contract. So where do we see the market headed from here, and where are specific support and resistance areas? Well, today was certainly a game changer in that we have to add a new resistance level, which we had marked as a key level of support, which is the 38.2% Fibonacci retracement at 1847. Of course, we're using the data set that covers the entire length of the rally, beginning at the lows in March at 1450 and trading up to the all-time record high that was achieved in the first week of August at 2088. So we do have resistance at 1847, then the 50-day moving average, which is 1880, then 1915, which is the 100-day moving average, and then our final resistance area we're pegging at the 23.6% Fibonacci retracement level at 1941.30. That means that we are currently flat after pulling small or medium profits, depending on where you entered the trade, in gold, and we are currently flat with no active trades in gold futures. My recommendation is to maintain a neutral stance. I want to really let the dust settle, because as far as I'm concerned, some sort of stimulus needs to be forthcoming. As I wrote about in yesterday's opening letter, there is such a need for it, and especially with unemployment benefits set to run out later on this month, and then the moratorium, the end of the moratorium on evictions, that coming to a conclusion unless it's extended on December 31st. It is for those reasons that I think it's imperative that some fiscal stimulus is passed by the House, the Senate, and the administration and agreed upon. We are looking at a daily candlestick chart, this of spot or Forex gold, which is currently trading at 1836.10. We sent out a recommendation to raise stops to 1850 also on the Forex gold trade. So you would have entered at 1841, out at 1850 or $9 per ounce on the 10-ounce contracts. You're looking at $90 profit per Forex mini contract of gold. We are looking at a daily chart of the Spyder Gold Trust shares. And as you can see, it's currently bid at $172.50, down $3 per share. What is important when we look at this particular price quote is the open, because we sent out our trade alert to put our stop at 173. It opened at 173.92, so you would have been able to put that stop in and effectively get out at 173, in at 171.50 for a profit of $1.50 per share. We are looking at a daily candlestick chart of the iShares Silver Trust, currently bid at $22.23 after losing about 60 cents per share. Once again, what is important is the opening price, because we moved our stop to $22.50. We got in at $22.30, so we made roughly 20 cents per share on this particular trade, and we are currently flat the iShares SLV also. Lastly, I do want to address our trade in March silver futures. On the actual trade alert that I sent out, there was a typo in that I suggested you raise your stop to 23.40 rather than 24.40, which is what I had intended, because the original stop was at 23.40. For those that would have kept their stop in the market, that trade is still in play. For those that realized it was a typo and simply raised their stop to 24.40, got out with about 11 cents worth of profit on that trade. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.